This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us here today on Market Talk, we always appreciate his time and insight. He provides a great and unique perspective into what's happening with the markets, and we appreciate it. David Widmar, Agricultural Economic Insights, AEI.ag, is with us here today. David, always great to catch up with you, buddy. How are you?
Doing well, Jesse. Great to connect with you today as well.
Well, I appreciate the time, David. Thanks again for joining us. We have a lot to discuss, a lot to cover on the show, so let's dive right in. I think just top of mind, let's maybe get this out of the way, so to speak. The Russia-Ukraine situation. We've seen the grain deal essentially fall apart. Russia suspending its participation. I know it's really jumped a lot of food security concerns back into this market here as we get into the month of November with quite a few other things in front of us. I just love your thoughts on this situation and your thoughts on what this is doing to this grain market here as we start the month of November.
Well, one of the things that we always like to step back and really challenge folks to think about is this a supply-related shock or demand-related shock? And our framework here is supply shocks tend to resolve themselves more quickly than demand shocks. Now, it's kind of one of these proverbial questions is what's the short run and what's the long run? In the long run, we're all dead. But, the idea here is we had these supply concerns back in the spring when this conflict, this war got started. We saw some movements and adjustments there. We got some grain flowing over the summer. Now tension has ramped back up. Grain isn't flowing. It's going to cause some short-term supply challenges. Don't want to underscore those, but in the long run, these economic signals to plant grain in other parts of the world, to expand ag production in other parts of the world, those signals are still there, and this is probably going to keep those signals going. So for producers in perhaps North America to change up their crop rotation if possible, and places like South America to plant new acres and maybe even see some double cropping in some like parts of the world. So we'll see how this plays out. Still a lot of tension, still going to create a lot of challenges and questions as we move through the end of 2022. And, this tight supply situation is going to stick with us for quite a while here in 2023 as well.
Well, and thinking about the tight supply situation and moving forward, we got some other topics I want to tackle. We got the November WASDE report coming up on the 9th, the day after the midterm elections, which is another topic we could touch on as well a little bit later. But looking at this WASDE report, I know you guys have a new question out on the AEI premium side, talking about what that U.S. corn yield would be on the November 9th report. What are you seeing there, and maybe what are some early notes you're getting from farmers about that, David?
Yeah, Jesse, one of the things that we launched this year, new to the AEI Premium platform, but also the uncertainty tool we have is this yield challenge. So we've asked 16 questions throughout the summer months, 8 about corn, 8 about soybeans, and we've been asking, what's the next USDA report going to say? Is it going to be a higher yield projection or a lower yield projection? And the real insight here is to not get caught up in binary outcomes like yes or no, but to get very specific, the probability. So when there's a surprise or when things don't go the way we necessarily thought, we can quantify that uncertainty and we can benchmark ourselves. So in November, we're going to wrap up 2 questions that are going to look at the change from October to November. I think that's personally a really hard one. We've seen these crops get smaller and smaller, but what do you really think is going to happen on this next report? There's been a bias here to say it's probably going to be lower. I've been running closer to 50-50 maximum uncertainty. But I think the other key takeaway here is we're also going to resolve 2 questions that we started at the very beginning of the competition back in May. The probability of these crops being below the trend normal. And corn is about 10 bushel away. It's pretty much a lock that it's going to come in below the trend normal. Soybeans are about a bushel and a half below that trend normal. So there's still a possibility, but what's most interesting here, Jesse, that we've observed, and this is, the only platform that's going to show you this, is that there has been concerns about this crop ever since it got planted back in May. And that's different than we've seen in the past 2 years. Usually it's the end of June or 1st of July that this expectation starts to move up or down. Either it's going to be a big crop or a small crop. We saw it really early this year and it's played out. And that's, again, going to continue to perpetuate this tight stock situation going into next year.
Well, David, thinking as well about that, I've heard some talk that that yield coming in looking pretty good in some areas, but again, we've had plenty of questions as we've worked throughout the growing season. So it'd be interesting to see if that U.S. corn yield comes in around that 181 mark or below it or whatnot as we move into that report on the 9th for sure. Thinking about the export side, thinking about demand some more as well. I know we have some different export challenges. Exports have been rather sluggish as of late. We have this potential GMO corn ban from Mexico on the table. We have China issues as well. As you look at the export front, what is some of the latest you're seeing there, and what are some of your thoughts with that part of the demand equation?
So I think the first thing to do is to step back and say we have tight stocks, we have high commodity prices, so we should expect usage to come back a little bit. And so we're starting to see that. We're starting to see that in the early export sales. We always look at the beginning of that September marketing year. How's that pace looking like? And when we looked at corn, it's a little bit sluggish than we've seen in the last 2 years. Not completely out of the ballpark, but still a little bit of cause for concern. We break that into China and everybody else, and both categories have been buying less. And the China situation is particularly unique. They're 2/3, I think, of where they were last year. So a big jump, or a third lower, a big jump lower, but still the third biggest purchase in 20 years of data. So it's not a record, and the sky is not falling, but it's somewhere in that Goldilocks zone. We don't really know how to quantify that. When we look at soybeans actually have a little bit of a bright spot. The early sales were pretty strong. China has actually been buying more soybeans the last few weeks and months, so that's been a bit of a development. But again, this underscore the China story. China's still buying corn, just not like they were the last 2 years, and that's still a good thing. They're still buying quite a bit of corn compared to the historic trends. Let's talk a little bit about Mexico here. We wrote an article, and it's kind of hard to summarize this. There's a lot of concern about the GM ban on corn. Is it going to be for domestic production? Is it going to be for domestic human consumption? Is it going to be for livestock? Is it going to be for imports? Huge amount of uncertainty there. But one of the key things to keep in mind is over the last 20 years, the corn story in Mexico has transitioned from domestic production going into food to more imports, and a majority of that corn supply going into livestock. So they've seen a shifting sector, and I think this is going to be part of what's going forward. They still rely on the U.S. for 90+% of their corn, so it's going to be maybe a transition, but it's going to take years to see this potentially play out.
The soybean market, we know crush margins have been relatively strong. The soy market, as you mentioned, the export side, we've seen some China buys. This market feels like it's got a little bit of a stronger story to it. I noticed in a recent Ag Uncertainties episode you guys do, you did some stuff with the Westcott-Jewison model applying to soybeans. Can you talk about that a little bit, David?
Well, the first thing I'll mention is, why is it a little better story for maybe exports for soybeans is because the price ratio is really, really low, which means soybeans are relatively low compared to corn. That right now, I think, is fueling some of this buying behavior, but it's going to fuel the
Hmm.
production behavior next year. But going to the production side of it, the Westcott-Jewison model is a really important tool, we think, for understanding the yield and the impacts. And so there's a corn model in there, there's a soybean model in there, and some of the work that our team has been doing this year is looking at what part of the growing season was painful. And the June precipitation part of those models is a big impact, but it doesn't hit very often. And it hit this year. There's only been 3 or 4 years on the corn side where this particular variable has been triggered. And when it triggered, it typically cuts yield back. So we were writing articles, in June, at the end of June and into July, saying, "Hey, watch out! This variable is on the edge. It did trip." And kind of this feedback, like you're saying, 10 bushel below trend line. We're around this 170 or upper 160s model, and we're not trying to predict per se, but we're trying to help people frame up all this weather information that we're getting and what are the implications. And so Um, that model has been very helpful for our thinking. It's been very helpful for our readers' thinking. Keeping in mind that again, June is very rarely triggered, but when it is triggered, it has a big impact, and we saw that especially for corn thus far in the year.
Well, and I think as well, and correct me if I'm wrong, but maybe models like this and thinking like this might be important just as we center around the whole climate discussion. I know there's been a few different reports that have come out talking about decreasing crop yields in the Corn Belt due to rising temps and climate change. So I'd have to think thinking more like what you just explained might be important here as we move forward, just throughout agriculture, David.
Yeah, there's a saying out there that all models are wrong, some are useful. And the idea here is how can we as consumers of those models can use that? And um, so we try to frame this up. There's a lot of uncertainty out there. It's how do you take noise and sift out the signals, the things that are actually valuable for our thinking. Every week there's some weather crisis that's challenging the global production. And I think part of this is realizing, okay, when you get to that June story, this is one that you kind of have to watch. And we were able to show that. So all about improving your thinking. How do you, again, insulate yourself from the chaos that's out there, and whether it's geopolitical uncertainty, it's domestic production concerns, international trade. How do you create a mental model? Sometimes these are physical models that we just talked about, and sometimes they're mental models. How do we you know structure our thinking, and how do we take that thinking and make decisions for our business from that?
David Widmar with Agricultural Economic Insights is our guest here today on Market Talk. David, I just maybe love to get your thoughts as well. Obviously, midterm elections are a few days away. We have high food prices across the country. I just wonder your thoughts. I mean, do you feel like high food prices could help shape how people vote in this election? And obviously, we know that depending on what way people vote, that could have an impact on ag policy and more moving forward. I just love for you to maybe provide some thoughts there with what you're thinking heading into the election.
There's a lot of macro uncertainty, a lot of macro difficulties. And so, will this become an issue that voters are going to be thinking about when they go to the polls? Yes. And then we can line up the variables that aren't going well for the U.S. economy. We can line up the variables that are going well. Things that aren't going well are high interest rates, or interest rates that are changing a lot, and inflation. What's going well is the economy shows growth, and we also have a lot of jobs. There are jobs in this economy. So I think this is it's hard to kind of put our finger on it and say this is like the recession in '08 and '09. It's a little bit different. I want to underscore that. So we'll see how this resolves itself. We'll see how this plays out. But yeah, I think the implications are really significant, especially as the farm bill negotiations are
Mhm.
underway. I know those two committees like to work together. They don't like to sort of flip back and forth whenever there's new leadership. So there could be some stability there for agriculture. That could be a positive thing as we see these negotiations play out. But I think we're still also in a transition. We've talked about transition a lot, Jesse. We sort of had the pre-pandemic or the early pandemic politics. We've had the post-pandemic politics, and now we're kind of in this new environment where we're going to elect leaders. Kind of in this pandemic is largely behind us, and now we're trying to navigate the economic challenges and uncertainties of policies we've had in place for decades, but also policies that came in place during and immediately following the pandemic.
Well, David, great stuff as always. Anything else that you are thinking about right now that's impacting agriculture, impacting the markets, or anything else you're working on the AEI premium side, maybe, or anything else you want to mention here today?
Well, two things I'll mention here is it looks like China is going to buy another record amount of ag products from the US. I think we've talked about this before. The data through August shows they're on pace for 40 plus billion. For context, 29 billion was the record. We did that back in I think 2013 or 14. We did again in 2020. Last year we got to 36 billion. So we're seeing a huge step up. Some of this is driven by higher commodity prices, but it's also more activity. Beef is the one that they're buying a lot of. It's kind of this small sector that's getting bigger and bigger and bigger. And so we'll wait and see until that's sort of the big 10-ton elephant in the room, so to speak. Second one we're really watching is how big of a wheat response do we see in the US? How many wheat acres are we going to plant? I keep hearing a lot of folks saying there's a lot of wheat growing in my area, and this is a lot more than normal. Of course, we have a drought in the western parts of the United States, so that's going to
Mhm.
be offsetting it. Wheat prices, no matter how you kind of measure it, hit an all-time high. But what's particularly interesting, Jesse, is that wheat prices relative to corn prices aren't historically high. So the wheat market is sticking in here. Producers have got to look at their budgets and make those determinations. And of course, wheat bats first when it comes to the acreage debate for 2023. Every acre of wheat that gets planted in the West is a fewer acre of corn and fewer acres of soybeans and in some cases cotton. So we'll see how that plays out. Of course, that first report comes out in the early months of January.
A lot of things we're watching there, and I agree. It's going to be a very interesting battle here shaping up as we head into the 2023 growing season and beyond. David, if producers want to be part of the Ag Forecast Network, they want to see the research and all the things you guys do with AEI and the AEI premium side of the website, how can they learn more?
The best way is to go to aei.ag. You can get access to our free weekly insights, send you a nice email. We have a podcast season going on right now about farm finance and farm credit. And then there's the premium side of things. There's even more content, the uncertainty tool called the Ag Forecast Network. So there's a lot of ways for individuals, producers, and those who sit across the table for producers who are looking for better insights, better frameworks for thinking about uncertainty, and just better ways of being an improved decision maker.
AEI.ag. That is where you can get more information. And as always, we appreciate the insight and the thoughts. With that, David Widmar with Agricultural Economic Insights, AEI. Thanks for the time, sir. Enjoy the rest of your week, and we'll talk to you again soon.
Thanks so much, Jesse.